So today we're going to look at Monster and check out and see if it's good enough for my portfolio. So we have Monster here. We have their ticker symbol. We know that they are in the consumer staples sector. And the industry within that is beverages. So Monster is, they sell those energy drinks. They also have like distribution partnerships, and they also have international deals that they do. So the analysis, just so we know, this was done back in May. So it's almost 2 months old. So this is like older data, but we're just going to see at that point whether or not it was good enough for my portfolio. All right, and at the end, we're going to rate each of these different areas. So we're going to talk about the valuation score, the profitability, our financial strength, the growth score, what we call our Graham score, and then finally, we're going to talk about our total points. And then we have a rating guide up here. In order for me to consider anything for my portfolio, I'm looking at an A or B rating. C, I put it maybe in my watch list, and D and F, no, not at this time, but I may go back and go revisit it maybe 2 quarters or a year later. All right, so let's start off looking at the margin of safety. So the margin of safety, I see that it is minus 372%. That's basically telling me that I'm paying 3.72 times the amount that it's really worth when I did my intrinsic value. So I do my own valuations, and everything that I do is done inside of Excel. Yes, I love Excel. It is so easy for me. So I can do anything inside of there. So when I did my valuation, it told me that it was like 3 times the amount that it should be. So that right there is going to be a red flag for me. I'm sure that we're going to lose points on that. The current price was $88.18. And then we have over here the market cap. So it is considered a large cap company. Large cap just means that it has between 10 billion and 200 billion for the market value. So that's why it's considered to be a large cap company. All right, so let's go and check out our valuation metrics. So what we have here, let me zoom in. All right, what we have here for our valuations, we have our FCFF yield. That's the free cash flow for all investors. It was a 1.21%. I'm looking for the highest points. It would be 12% or greater. So I'm sure we're going to lose some points there. We have our EV, enterprise value, to the FCFF. It was at 82.65, and that I'm looking for it to be 10 or less. And so basically this is comparing the total value of the company to the free cash flow that it's generating. So the lower values are basically indicating that investors are paying less for each dollar of the cash flow. All right, our price to earnings, also known as a PE ratio, that one is a 45.45, so I know for sure it's going to lose some points there. For me to get the highest points, for any stock to get the highest points for me, I'm looking for 15 or less. I know it's kind of hard right now in the industry based on what I've been seeing. They are a lot higher, but that's what I'm looking for. So this one is 45. So basically you're paying $45 for each value of earnings according to my calculations that I did. And then our price to book value, that was at a 10.45. And so when we talk about the book value, we're talking about the company stock price to the value of its total assets. So it was 10.45, and for it to have the highest points for me, I'm looking for 1 or under. All right, when we go and look at the profitability, so we want to see how profitable this company is. We're going to look at the ROIC, that's the return on invested capital, and that one we have a 30.11. So that's good. I am looking for 15% or greater in order for it to have the highest points. Our ROE, meaning return on equity, that is measuring how effectively the company is generating those profits from the investments that it's receiving. And it's at 23.09. So that is good as well. So that's going to probably receive high rankings for me. I'm looking for 20% or better. And then when we look at our ROA, that's return on the assets. That is measuring how well the company is using the asset so that it can generate more profits. It is at 19.08. And so again, that's good as well. I'm looking for 8% or better. And then our operating margin is just basically telling us how much profit is in the business after the operating expenses are paid. So our operating margin is 29.17. That again is going to be good. And this is in percentage. I don't know why I didn't let me expand that so we can see that. So this here is going to be high rankings as well. I'm looking for 20% or better. And then our FCF margin, that is our free cash flow margin. This I believe is also, that should also be a percent as well. That is 12.41%. I'm looking for 15% or greater. So that's going to probably lose a few points there for me. So overall, looks like in the profitability section, it looks like they were doing pretty good. So we'll see what their ranking is at the end. So let's check out now their financial strength. Let's see how they're doing there. So when we talk about our financial strength, let's first look at their debt to equity. So it's looking really good. It's at 0. So if it's at 0, that's going to be the highest ranking. So anything that is 0.5 or lower is going to receive highest rankings for me. Now, interest coverage is basically telling us how easily can this company pay their interest on the debt that they have. And they have 366. So they are going to definitely have highest rankings on that because I'm looking for 10 or greater. When we talk about our current ratio is just basically talking about how the short-term assets compare to the short-term liability. For me, I want to see that it's at least 1.5 or better. 1.5 to 3 is great for me. This one has 3.7, so they're definitely going to have high rankings there. We're looking at our growth metrics, and under our growth metrics, there are 4 different areas that we're looking at. So we're looking at their revenue, their earnings per share growth, the book value growth, and the operating cash flow growth. For their revenue, I am looking for 15% or greater for the highest points. They have a 10%, almost 11% growth, which is not bad, but it's not going to get them the maximum points. For our earnings per share growth, I am looking for 15% or greater. They have exceeded that. They have a 23.2% growth earnings per share. And in terms of their book value growth, I am looking for 15% or greater. They have exceeded that as well. They have a 38.54%. And just so you know, the book value growth is just measuring how the company's net worth has increased over time. In terms of their operating cash flow growth, I am looking for 15% or greater. And they have 8%, which is not bad, but it's not going to get them the maximum points. Now we're going to go over to our income and our quality metrics. So this is going to be part of what I call my Graham score. So we're going to look at their dividend yield. Their dividend yield is listed as not applicable. And that's probably because they don't issue any dividends. So again, their dividend score is going to be not applicable, but their earnings quality growth, I'm looking for it to be 10 percentage points or less. They have 3 here for their quality score. And basically it's comparing the revenue growth, the net income growth, and the total asset growth. So if a company has a higher score, that is because all 3 are growing at similar rates. So that's what I'm looking for there. So we have looked at all of the different aspects individually, but let's go check out and see what their total score is. Now, just so you understand what we're looking for, in order for a company to be considered for me, they have to have a 90 to 100% to receive an A, which is 72 to 80 points. We are looking for 80 to 89, which is 64 to 71 points. And if they're at a C, that means that they have 56 to 63 points. And then anything below that means we're going into the D and the F category for me. So in order for me to consider them, I am looking for 64 points or more. So let's check out and see what they earn. So for the valuation score, they received a total of 3 points. And when we look at their profitability score, they received 19 points. For their financial strength score, they received 11 points. And then for our growth score, they received 17 points. And then finally, they have received 5 points for the Graham score. So we take all of that into consideration. They have received a total of, let's see, 55 points. So unfortunately, even though they did well in their profitability and the growth score, they did okay in the financial score. It was the valuation and the Graham score that did not do so well for me. So I'm going to put them here in our D category, very close to our C's or above. So no, I will not be investing in Monster at this time. Thanks again for watching. If there's a stock that you would like for me to look up, please drop it in the comments. And if you're wondering about anything else in terms of stocks, investing, or maybe Excel or something else, feel free to reach out to me. You guys have a wonderful day, and I will see you next time.